But can I point out that based on my model of valuing the intrinsic value of Bitcoin using credit default swaps, Bitcoin is now worth over $400,000 US per coin as a insurance policy on a basket of global fiats, okay? This is a dynamic measurement that changes as the spreads or the credit insurance premiums change on default for sovereign nations. The USA still the market only charges the USA 16 basis points per year, which is equivalent to $16,000 to insure $10 million of US Treasury debt. You can go all the way down the spectrum and not include Russia, but all the way to Turkey, where the probability of default is very meaningful. But you can accumulate all of these essential fiat risks. You can consolidate them. You get a value for Bitcoin as the most beautiful form of insurance against default on a basket of fiats. And one way I like to point out is, Max, you can essentially get the value of buying protection on the USA for about $1 trillion, and you get all the other fiats for free. And guess what? The value of Bitcoin is less than $500 billion, which means you buy Bitcoin today, you get default protection on the USA and all other fiat currencies for free. Wow, what a deal. Ship it in. People don't understand what a beautiful asset this is, and there is no counterparty risk. You are not buying this from long-term capital management. You're not buying it from a Lehman Brothers or a Bear Stearns, two insurance sellers who almost went bankrupt themselves. One of them did. Point is, Bitcoin has no counterparty risk, and you can get protection on fiat currencies all across the world.
Okay, so Greg, the synthetic credit default swap, or the synthetic CDS, as you've just described it, it's the current price of Bitcoin is roughly 95% discount to the imputed or implied value of the synthetic CDS, as Greg has outlined it. Now that's a huge discount. So why I don't, what you're putting forward there is such to me, if I was working a desk on Wall Street, I would be able to sell that all day long. I don't understand. I mean, in 1980s, I was selling quote unquote portfolio insurance and sold a lot of it. Of course, that led to the 1987 crash, but that's another story. But in other words, the story is you've got $1 million or $10 million stock portfolio. We can wrap that for 2% a year with derivatives, and you've got a maximum 2% downside on your portfolio, and you've got all your upside. So this product is, I don't understand why nobody's not like
intellectually lazy, Max. The guys that are programming the algos in the big trading shops, they're correlating it to NASDAQ because they're looking through a rear view mirror and assuming that Bitcoin is actually a risk asset. No, Bitcoin is insurance. You just need to describe it to the proper analytical minds, and it hasn't made it that high up the ladder yet. And by the way, if you are a Jamie Dimon and you perhaps do understand this, God forbid you go out there and tell people, because it disintermediates and cannibalizes your business so quickly that you don't want to tell the truth. So I think that, I've made some progress in convincing people that Bitcoin is insurance. It's a long volatility product. It is equivalent to owning default protection on a basket of sovereigns. If I was working at a hedge fund and pitching this a lot harder, like I did in my younger days, maybe I'd have more success. But right now, I'm just happy to spread it amongst the plebs, and it's sinking in. I guarantee you Ray Dalio gets this. Ray Dalio, though, needs to move billions and billions of dollars into Bitcoin, and he can't do it without moving the market. So, this is an incredibly cool concept. There are restrictions because Bitcoin is only still around a $600 billion asset, and Ray Dalio needs to buy about 600 billion of it. Okay. Do you think that wouldn't impact the price of Bitcoin? it's a bit of a, it's going to be sucking and blowing at the same time. Just understand, though, that this will permeate the common thinking on Wall Street with the help of guys like Fidelity, who is actually doing some pretty good work on Bitcoin, in my opinion.
So the $400,000 implied price, is that, is there a volatility discount that you've applied to that? And
no, it's in today's dollars, because CDS is volatility. So CDS is directly related to vol, right? You look at the VIX, you look at credit default swap spreads.
So it's got a volatility premium.
Correct.
I mean, how do you price in the volatility? Is that as a premium?
That is like an insurance premium, exactly.
Okay, and then so there's no maturity date on Bitcoin.
So beautiful. No theta, no theta, so no time. No counterparty risk. And Max, I'm going to blow your mind here. Bitcoin is a put on the Fed put.
Yeah, no, I totally agree with that.
What does that mean? It's got gamma. You look your whole life for gamma, okay? Gamma is this magical thing that you spend your whole life looking for, and it exists in Bitcoin, and these knuckleheads on Wall Street haven't figured it out yet.
Right. Well, probably in part because the hedge fund people that are in crypto, like, not to pick on Novogratz too much, but nevertheless, he is the highest profile ex-hedge fund guy in the crypto space. He lives for gamma, right? He never puts this pitch forward because it's so easy to make money shilling shitcoins, you see? Yeah. If there was some law that applied, some serious enforcement of the current law. They don't need any new laws. All that Gary Gensler has to do is enforce the current laws. And, Novogratz would be forced to actually start working for a living and not just shilling crap. And he'd have to look at this trade as Greg has outlined it and, put the power of his fund and his colleagues focused on this. That's another benefit. I think that's another reason why Gary Gensler is completely a captured and unreliable regulator, because he realizes that if he took away the punch bowl of having these guys print money in the shitty way that's completely illegal, they might focus on Bitcoin more, and that would, hurt his paymasters down there on Wall Street.